Hi guys and gals, welcome back into the Everything Money channel. We're thankful you clicked on our video. Today we're talking about Nautilus company, Nautilus Inc. It's located in Vancouver, Washington. This is the workout equipment. Mo's, you're a huge fan of this, Mo. They manufacture fitness equipment, brands like Bowflex, Modern Movement, Octane Fitness, Schwing, and Universal. Mo, why do you love...
Wait, Schwinn? Like the bikes?
It's what it says here. Schwinn Fitness. But Mo, why do you love... What do you know about Nautilus so
Their
much?
equipment's awesome. I mean, I just love how all their machines are just smooth moving machines. They hit the right spots. They're the best. They're great.
Yeah, so we got some requests for this from our patrons. We love you. You know, I love you out there. And we're going to go over it. We're going to use our 8-pillar analysis to take a look at this company, the financial health, not just the price, which has been everywhere since 2000, pre-2000. And so I introduced to you our leader, our sacred leader. I'm sorry, what's your name again? It's Paul, right? Or Saul? Everybody call Paul.
So
Uncle
it's
Paul.
funny. Do you know how the Saul Goodman came about?
No, I don't remember.
It's all good, man. So he said Saul Goodman, and it was Saul Goodman.
Oh, really?
Yeah, I just said this to somebody last night. They're
Goodman.
like, really? I'm like, I don't remember if it was in Breaking Bad or if it was in Better Call Saul. I don't think it was Better Call Saul because I remember hearing it before then. And it was, Saul Goodman. Like, it's all good, man. Saul Goodman.
We need a show like Breaking Bad. That incredible comeback.
Bo just finished the 4th time watching
Yeah,
it.
great show.
Jeez, it's incredible.
I got through halfway through season 5, and then I stopped watching it again.
My wife did as well. Never saw the end.
Oh, no, I watched the whole thing, but I was rewatching it recently, and then I got distracted with other things.
I just keep telling her he lives. Let's look at Nautilus, Paul. What do you think about this company? Look at Look at the stock price.
I mean, yeah, look at the stock price stuff. This was $1.40 a year ago.
$1.40.
And now it's at $1.70. Got as high as almost $30 recently. So it's up 10 times in the last year. So market cap, it's a small company relatively, $530 million with over that in revenue. So it's selling for under 1 times sales. But check this out. So we already have our PE of 8.8, check mark, and our profit margin of 10.8, check mark.
Double check marks, okay.
No dividend. Free cash flow, 73 million. 5-year free cash flow of 26. So it's showing an increase right now in free cash flow, return on equity. So the only thing I don't like here is the 5.1% 5-year return on invested capital. That's becoming a more important attribute that I'm looking at because it basically shows me how is the company deploying their cash to make money and what kind of return are they getting on that. Typically, according to many value investors, whatever the return on invested capital is, if you pay fair value for the company, you're basically gonna get that return on the company overall. So you need to pay a discount for this 5.1% to end up being a much higher return for your investment. So it's kind of natural that the company is selling for a discount here based on the 5-year return on invested capital.
If that was a lot to take in, you're new to this, we're going to slow it down here. We're going to use our 8 pillars looking at the health of this company. Paul, people requested this because just a month ago, this price was almost doubled. And so it's fallen quite drastically. So it is now the time to buy. I guess that'd be the question.
Well, that's the thing we're going to look at. We're looking at, is it reasonably priced right now? And the reason I brought up return on invested capital is return on invested capital is not calculated based on any valuation metric. It's based on the net income and balance sheet. So what we're trying to do is say, if we're going to get a 5%, if they're only deploying their capital and making 5% on it, you have got to pay a much bigger discount to value, to what you would normally assign to it in order to get that return. From what I'm seeing so far, seems about right. 8 times PE, an 8 PE, that's a pretty big discount to make up for the lower return on their extra money. So these are some of the things, if this is confusing for you, guess what? It should be. But as you watch more and more videos, you'll understand better about how to look at a company. Even though this sounds complicated, it's actually very simple. It's simple but not easy. That's a very big thing to understand. Investing is simple but not easy. What makes it easy? What makes it simple? The numbers are actually pretty straightforward. When you talk about these complicated Excel sheets, we don't do that. What we do is say, hey, listen, money in, money out. What are we paying to get that money in and money out? That's all that really matters to me. Now, that money in and money out level will be based on other things, but I'm looking at, one of the things I want to look at is our next pillar, income growth. Look at this, guys. This is a company that's growing.
Can you blow that up, Paul, real quick?
Oh, absolutely.
You know, you talk about how easy it is. My son hopped off the school bus, my 10-year-old, a 5th grader, and was thrilled to get access to this Everything Money website. And he started typing in companies, going crazy. Companies I didn't even know he was interested in.
That's awesome.
Amazing. So,
and your son's 10 years old.
That's true. Keep going. This is revenue growth over the past 5 years. Is pillar number 3, Paul.
406 to 552. Now, keep in mind, guys, they were declining a little bit here. And I'm sure in the last year, because of COVID, they had a massive jump up. And so immediately, the 8 pillars are a great way to get an idea of what question to ask. My next question is this because of COVID? And if so, is this sustainable? That is the big question here, because right now it's selling for 8 times last year's profit. Well, if last year's revenue was up a lot because of COVID, is the profit going to be sustainable as well? Now, the good news is you go back 10 years, 180, 194, 218, 275, 335, 406, 406. And about this time, isn't Peleton started to become really big around this time. The concern I have with this company, with a company like Nautilus, even though they have a great brand name and history, there's a lot of competitors out there. Amazon's making their own equipment. Peleton makes their own equipment. There's a lot of brand names out there that are making really, really great. What's the other one?
Tonal has one.
Tonal, but what was the one I got for Lisa? That's a big brand too. Not Netflix. NordicTrack.
NordicTrack.
NordicTrack's big, but they've been around for a long time too. So these are the things to consider as you're going along.
All right, so you did profit. Profit is pillar number 4, Paul.
34 to 60. Check mark. Ooh, look at this. Big loss this year. The previous year, $93 million. Big loss.
But that's 4 straight checks.
That is 4 straight checks so far.
Let's go to pillar number 5, which is shares outstanding. This is the actual number of shares that exist in the world. We want this going down, right, Paul?
It is going down, not by much, but it's going down. Check, please. 30.92 down to 30.29. So still another check mark there.
How about pillar number 6 is current assets over current liabilities?
Now, for those of you who are new, current assets is basically cash on hand, or things that can be converted to cash very quickly. Current liabilities are the debts they have right here, right now, that they're going to owe here in the next year. So we have $220 million in basically cash on hand and 117 in current liabilities. But here's the great news. Total liabilities is 155. So they have 220 million and their total debt is 150 million. That's like you at home having 100,000 in the bank, and that can pay off your entire house, your car, your student loans, every debt you have, and still be left over with money. So we actually have to subtract 70 million from the market cap of the company because there's an extra, you can pay off all their debts and still have $70 million left over.
That takes our market cap down to 460 million total.
$460 million probably takes your PE down to 7 versus 8.8. So that's pretty solid. That's a really good thing.
Pillar number 7, which is your favorite, you know this, is free cash flow growth over the past 5 years.
Seth, what is free cash flow?
Free cash flow is cash from operations minus capital expenditures, and you want to have a lot of this because it's like obviously it's the cash on hand where you can make acquisitions, buy back shares, pay dividends if you have them.
And that's the money that really matters to me, not the earnings. Because earnings can be manipulated with any sort of SEC rules and accounting rules. We just talked about a company today that just restated their financials because they said, oh, we counted this wrong, but cash flow is cash flow. Money in, money out. Can it be manipulated? Yes. Is it harder? Yes. So, free cash flow. Oh, and the great news is, because of this trusty software that I love so much that you can have, I added 2 lines here that tell you your I added this line. It tells you your free cash flow immediately instead of having to do the math. 32 million to 73 million. Check mark there. But again, just like their profit was negative last year, their free cash flow was negative last year. No, sorry, not last year, 2019. So this is a big question to ask. Why did they all of a sudden lose money in 2019 with revenue and profit being where it was?
Should we talk about the pillar number 8, which is the price to free cash flow?
Yes. So the average here, my trusty software also does it for you. $26.8 million in the last 5 years. The market cap was what?
460 mil.
After the deduction?
Yeah, after the deduction.
What's 460 divided by 26? 16?
17.7.
Okay, 17.7. We want this less than 20, so it is a check mark. Now, guys, for those of you paying attention at home, what did you just hear me say? Look at this 8 pillars tab.
8 checks, baby.
8 checks. I'm not sold on it, though.
Come on now.
Yeah, I'm not sold on it.
Tell me why. Tell me
I don't
why.
like the fact that their revenue was falling before this past year, that they lost money in 19. There's a lot of competition out there. I don't think anything's really proprietary for Nautilus. They don't have the community, I think, that Peloton's built. I mean, listen, we just got 2 Pelotons in the office.
They're incredible.
And I was like, oh my God, this community is incredible. Like literally, what were you doing, Mo? You were gonna work out and there was like 7,500 people waiting to work out with you.
Waiting for a class to start in 20 minutes.
And everybody pays $40 a month. So they have recurring revenue. Now, does Nautilus have the same thing? Probably, but nobody really knows about it.
No one knows about it, yeah. I mean, the marketing, Peloton's done a great job of that marketing, and the mirror too, whatever that workout thing.
Yeah, Lululemon actually bought them, the mirror.
Oh, well, they're doing a great job.
Yeah.
But
I just look at this, and I'm a little hesitant about Nautilus. I'm not gung-ho. I don't like the return on invested capital being so low over the last 5 years. And I just don't like, if you really think, I said this, if you think their last year, 2020, of $500 million some dollars in revenue and profit of 60, whatever the number was, is sustainable, all day long buy it. It's an all day buy. But part of value investing is the growth prospects. Are they going to grow from here? You need to go do more research on what are their prospects for 2021, what's the company saying about their future, and how they're going to battle with NordicTrack, Peleton, Mirror, Tonal, and all these other companies out there.
This is one of the stocks that's in the little book that beats the market, the Magic Formula Investing. It's in there as well. Yes, it is. It's in here. So,
well, look at their return on assets. It's huge, 26%.
If you're drawn to trading, momentum trading or day trading, we'll head over to Dr. Momentum, Trader Mo, to talk about Nautilus. What do you got, baby?
So I always talk about gaps and how gaps are going to fill themselves. This is a great example of it. Here's a gap that happened overnight. The price dropped on you. So what a gap is after the market hours are closed, news comes out, earnings comes out, something where the price moves a big amount over that period. So here's that little gap. Again, this is probably, what is this, earlier this month, maybe the end of February, another gap down. The good news about gaps, as you can see right here, is that gaps always get filled. I shouldn't say always. Gaps, majority of the time, get filled. So when I see a gap right here, and I see a stock that is getting towards the bottom of its stochastic, this is making me want to say I'm going to put it on a watch list. And the reason I'm going to do that is because I do think that this gap will eventually get filled. So I'm going to throw it on my watch list, wait until this red line starts moving up into the sweet spot. These candlesticks will start turning green at some point. This gap will get filled. Maybe you'll get a run to 30 bucks, which is double the price right now. So this is something that if you want to be a good trader, recognize gaps, and that's how you can make money.
I mean, look at this right here, guys. I just sat there and said I'm avoiding this, even though it had 8 check marks.
Go on.
And Mo's sitting here saying, guys, this could go to 30. That's the difference between chart reading, momentum, and fundamentals. You can make money in each one based on a different set of attributes. I'm avoiding this from a fundamental standpoint because I'm a little apprehensive about the future and their competition, but doesn't mean you can't make money on momentum and chart reading like Mo's doing. So that's the reason to join this channel, and that's the reason to join
the Patreon. If you're drawn to this, whether value investing or day trading, momentum trading, we offer both here at Everything Money, and you can get a part of our community. The link is in the description below. If you join our Patreon page, we do a quick little sell on this, Paul, at the end of our videos to show that not only do you know what you're talking about, but you can get access to Paul, his portfolio, myself, Paul. We were talking about my portfolio last night in the group, and you can get access to Trader Mo.
You were?
Oh, yeah, because I put an update, Don. I put an updated one. People were asking about what I'm buying and selling, and I show it. Obviously, it's very good because I do follow the little book that beats the market. Kind of. Well, and I need to ask you about that because I lost all my shares on a call option yesterday.
No, I meant EBIX.
Kind of. Well, again, I go back to kind of because I know I lost those. We got to reevaluate. But regardless.
You didn't lose EBIX.
You sold EBIX.
No, I'm not talking about that stock, man.
I know, you're talking about AMCX.
AMCX, yeah.
I told you what to do.
We have to buy today.
You should. I told you before. We'll talk about it.
We'll
but
get
yes,
after
he's going to learn more about options trading because he should never be allowing his options to get taken away from him. You should just exit the option, take the loss on that one. You have gains on the other one, and overall, you'll make money every single month.
If you're into options, if you're investing, join the Patreon. You can get this done. Paul, show them the graph they're going to show right now.
So, guys, when I made this chart 3 weeks ago, we were at $14 a month.
This is for the lowest Patreon group.
We're already at 17, and it was $8 just 2 months ago. Look at all the things you get. Our 8 pillars, 10 years of financials. I'm building all of this up. And you get Discord community. This is the biggest thing. My goal for 2021 was have 700 people in our buying our software by the end of the year. It is today, March 23rd. We have 1,628 people. This is the major hype right here. Our competitors, $200 a month, $200 a month, $35 a month for their entry levels. They don't even give you everything we do. If you're serious about investing, this 17 is going to become $49 a month at some point in the future. Get in, because whatever price you pay, you're locked in for the future. This is incredible. Keep doing it. It's a great way to learn. The Discord's awesome because people are in there all the time talking about investing, ideas, trading. Literally, we get emails every single day from people saying, this is the best decision I've made. If you're serious about making money and being in charge of that, this is the way to go. And it's for less than $1 a day, almost 50 cents a day. Do it.
If you've never joined a Patreon page, perhaps now's the time. Again, I felt very lonely until I met Paul and Mo in my journey of investing my own finances. And so if you can go in there, you jump on the Discord channel, you can put your ideas out there, and people from all over the world will interact and give you their thoughts. Maybe they know more than you and help you along. So that's our take. Paul, that was Nautilus, an 8-pillar stock
that I'm kind of apprehensive about.
Yep. Tickle the thumbs up on the way out. Thanks for watching, guys. Love you. See you around.